Welcome to The Real Money Show, the number 18778 Silver, the website, guildhallwealth.com. Let's talk about debanking and unbanking. Jerry, can you tell us a little bit about the difference between the two? Because these are brand new terms.
Yeah, definitely something that we're seeing a lot of people do in response to a lot of the things that are happening, especially in the banking system, the currency systems. Over the past few years, especially, we saw a lot of people undigitize and unbank. There's a lot of de-dollarization and undigitizing your wealth happening already, but unbanking is what it is. It's generally unsubscribing. And Canadians and Americans and global citizens are getting their money out of the banking system. JP Morgan, for example, has seen the most amount of money. About 25 of the largest banks are seeing lower lows in deposits in the U.S. and in response to FTX, as a response to the weaponization of the banking system potentially, maybe overprinting. We're seeing a lot of inflation. They released 40-year high inflation.
Yeah, I would.
And now they're raising interest rates over and over again. We're now seeing bankruptcies happening. Bank accounts are being ravaged. The savings are being ravaged. So people are unbanking. They don't want to participate in the system. They don't want to even participate in keeping the money into stocks, maybe Vanguard or these Black Rocks. This is what people are telling us.
So you're saying on the one hand, it's unbanking in terms of a fear portion, worried about the stability of the financial system, because we've seen it before with the great financial crisis in 2008, and nothing got solved. So we're hurtling towards another financial collapse. So there could be a bit of a fear trade. Then you're also saying there's inflationary reasons keeping up, that you could be dipping into savings. That could be another reason why people are also withdrawing funds. And then as well as inflation, which is interesting because when the interest rates were at zero, you had to chase yield. Now that they're at 5%, you still have to chase yield because even if you're getting 5% on a treasury or whatnot for 5 months or 3 months, the fact is inflation's higher than that.
Mm-hmm. The real
rate is more than that. So you have to again chase yield. But what if you don't want to chase it in stocks that are already overvalued because of the low interest rates? Mm-hmm. Where do you turn? So I suppose a lot of that is coming into the precious metal market, and you do see that. You do see physical metal being pulled off the exchanges and going into private hands.
Yeah, we're seeing that. People want to, when the trust and the credibility is just shot, it's very difficult to get that back. It's very, very difficult to get the money back into the very system that you don't trust. And this is developing. This has been a trend of de-dollarization and now debanking and unbanking rather. Now, debanking, on the other hand, is what we're seeing when bank accounts are being closed, when banks are closing the bank accounts for individuals for maybe participating in a protest, maybe. And this is, we're now seeing the entrance, the third day for Tamara Lich with the convoy, the Ottawa convoy happening. So I'm paying attention to that. I'm very invested in that as well. I like to see what's happening and developing in there.
I think the biggest sort of figurehead of debanking right now would be Nigel Farage, a politician out of the UK.
Him especially, yeah, that's right. He was just an opposition leader, right? He had very strong views, and they closed his bank accounts. And this is how they treat the opposition in leadership in Parliament. This is very dangerous in my opinion, and people have taken note.
So is that similar then to the social credit score in a way? If you're not espousing the correct views in certain countries, they basically cut you off from your ability to spend money. Is that similar, or is this a step towards that?
Yeah, I think that's a step towards the creation and implementation of the central bank digital currency idea. But again, it's an idea. I think it's a total failure, simply because people are just not going to participate and subscribe to this. Now,
there was some news this week talking about a kind of a version of debanking with regard to mortgages, I believe. Is that right?
Yeah, that was a great article that was brought up by a great Instagrammer, IG guy. You guys got to follow him. Is at Daniel Folk. He was on IG. He talked about this trend that he's talking about. He's a real estate guy, and he brought up a really good article from last week from BNN Bloomberg. Mortgage growth buckles under weight of rate hikes in Canada. And his chat was very quick and succinct and really talked about the changing in the banking industry, specifically due to mortgage growth. Year over year, mortgage growth is down. Lenders are losing money in the mortgage space. A lot of low growth, which is what we're seeing in a stagflation environment. But he pointed to some of the further changes that some banks are doing. And some banks, this gentleman from one of the big banks is talking about, we're being more efficient with regards to the use of our capital. The strategy has been improving this bank's net interest margin, and what they're doing is they're using customer deselection at renewal. So they're deselecting. They're saying, we're not renewing. Go find another bank. And this is another measure that I think is very alarming. This is part of the trend of debanking, I believe. Your thoughts on this, Jeremy?
So just to be clear, you're saying that, or rather this article was saying that in some cases, there are people who at the renewal point on their mortgage are being told, we don't want to renew your mortgage here. Yes.
And now this person basically was saying that the strategy has been improving the bank's net interest margin. So if this particular mortgage was considered maybe a stage 3 loan or an impaired loan that made the bank's balance sheets look bad, then they would have to deselect this client and, kick them to the curb.
Well, I think it's a very interesting development in the mortgage story.
Canadian banking story.
My personal belief, and I've seen stories on Zero Hedge over the years, that I think that the banks fell into predatory lending. I think the lending got really loose. I think that as interest rates came down, how do you make the same amount of money? You lend more. And so they would just start saying, okay, we're gonna let people borrow more because interest rates are low, not thinking the long term, the long game, thinking about what could happen in 10 years if interest rates did go up and could the client handle it. So I think that the regulatory side of it got fast and loose. I think now that debt has become more expensive, they're now dealing with the fallout, and they're not going to take blame for any of this. They're just going to deal with it. And I think that perhaps a lot of these banks now have a lot of moving towards a toxic book. Mm-hmm. And so they're going to move to very quickly get rid of some toxic things as they can. And I feel like that, unfortunately, for these particular mortgage owners who have to renew, that they become collateral damage in this. Mm-hmm. I don't think it's ultimately, I think that whether it is debanking or unbanking, I don't believe that the banking system as a whole is going to disappear. I think these banks are the biggest banks, longest standing banks. You can bet your bottom dollar that if anything came to a head, they would be bailed in. Depositors would get their money. We can talk about that in another segment. But I think that we are going to go through a lot of changes.
Mm-hmm. I couldn't agree more.
And I think that it just makes sense to be defensive here about what you're doing. And I think that both situations are leading to a place that says, if you have the wealth, why would you keep it in the bank at 0%? And if you're getting 5%, you're losing to inflation, when you can see gold has kept up with inflation, silver's kept up with inflation, diamonds have kept up with inflation, many things have kept up with inflation. And then, of course, unsubscribing, as we've talked as well, is a way to say to the bank, listen, I didn't like your lending policies. I don't like how you're dealing with yourself. And if you can get your act together, right, and offer me something, maybe I'll come back. Mm-hmm. Last 20 seconds on this?
I agree with you, Jeremy, with regards to the banks. I think that this is a response to these measures of deselecting. They may not be a debanking. They may sound the same, but really what it comes down to is, yes, the loose underwriting. They didn't do their homework, and they were, let's get this approved. Too much, too fast, and now they're paying the price, and unfortunately has to fall back on the people that have to, maybe potentially sell the property. But yeah, it does definitely talks about the consequences and take ownership for responsible borrowing if you have to borrow, but responsible money management especially at a time like this.
Unbanking, debanking. Thank you, Jerry.